Hey folks, Andrew Packer here. Welcome to Trading Tips. Today, we're going to look at a simple-to-use strategy for playing companies that periodically pop in and out of the news. So let me explain what the opportunity is and how to play it. Now, most folks think of the stock market as just going up or just going down. While that may be true in a broad sense, it does a lot of other things in the short term. It often moves sideways, like it has for most of 2018. Or individual stocks and sectors may rally while others falter. This year, one sector has not only been the market leader for rallying, but it's been in and out of the news headlines for being a so-called hot place to invest your money. I'm talking about companies in the business of manufacturing and growing cannabis. That's right, the pot stocks. They're one of the few sectors that's been a runaway winner in this challenging market year to date. And there's a solid logic behind that move. At the start of the year, many states in the US decriminalized marijuana use, and more are on the way. In fact, the country as a whole seems to be moving inexorably towards a tipping point where pot is legal all across the land. What's more, Canada just decriminalized marijuana use earlier this month. Now, love it or hate it, that is the trend. And with that trend, investing in legal pot growing operations looks mighty attractive. Imagine being able to buy cheaply into a brewery stock right at the end of Prohibition. Now, this isn't the first time that we've seen the market go gaga over some kind of big potential mover. Last year, the market was obsessed with cryptocurrencies. And that asset class, despite not having a publicly traded company behind it with any financials to really analyze, managed to soak up a lot of trading interest in the span of just a few months. But last year wasn't the first time that the cryptocurrencies had a big rally and subsequent crash. Likewise, in the 1990s, tech stocks often rallied in the first part of the year, fell in the summer into a deep bear market, and then rallied to hit new highs by the end of the year. So when I see pot companies making headlines, it's interesting. And right now it's even more interesting. That's because these companies have started to pull back substantially from the all-time highs they hit earlier this year. So with that in mind, if you're interested in making a big trade in this space right now, the first thing you want to do, as you can see on the old whiteboard here, is identify the most traded company. If this were the 90s, we'd be talking about a well-traded, well-known company like Microsoft or Amazon. A year ago, with the cryptocurrencies, we'd be talking about Bitcoin, the king of the cryptocurrency space. Now, for right now, the big company in the pot space is Tilray, ticker TLRY. It's a Canadian company, but it also trades on the NASDAQ, and that's great news from a trading perspective, because that means that it has options that we can trade. Now remember, when you use options, you can essentially borrow 100 shares for every options contract you trade. So if you expect a big move in a stock in a short period of time, you can control more shares for the same amount of money. Or you can control the same number of shares you would have bought, but at a fraction of the price of buying them outright. So these are both great reasons to use options instead of simply buying shares. So in the case of Tilray, a company that's traded as high as $300 per share in the past year and is currently in the low 100s, buying 100 shares would set you back over $10,000. But for that same $10,000, you could buy several options that control a few hundred shares. That's how you get leverage with options. Alternatively, you could just buy one option and pay around $1,500 or $2,000 for an option with a reasonable chance of a great return and use the other $8,000 to $8,500 you'd save on other trades. Pretty cool, right? That's the power of options. So the second key criteria when looking at a news-driven company that's apt to make some wild moves forward is to find an option trade that makes sense. So what do I mean by making sense? It means that you can make a decent profit without necessarily being too risky. So with shares of Tilray down over 50% from their recent peak, it's possible that they go back to new all-time highs on their next upswing. It's also possible that as a news-driven trade, it continues to go down. So again, that's why it's better to buy a few options than to buy shares, or go on and buy as many options as you could. In the case of Tilray right now, I like the January 2020 $270 calls. First, it's got a large amount of open interest right now. That suggests that traders think that the company can get back to close to its all-time highs by January 2020, about 14 months from now. And maybe it only takes a few days or weeks instead, and maybe it doesn't get there at all. But at a recent price of around $15 for the call option, you can pay $1,500 per contract instead of paying about $12,000 for 100 shares right now. So this is the kind of trade that looks attractive. If shares bounce, and over a 14-month period, a company that's fallen 50% should see some kind of bounce, then these options can really rally strongly. So what happens now? Well, if pot stocks end up like cryptocurrencies, there's a chance that this call option expires worthless because shares just end up not really going anywhere. But if you only buy a few options, the money that you lose on that trade would still probably be less than buying shares and see them fall further. But here's the good news and why this kind of trade looks really attractive. If shares do go back to their all-time high of $300, then these options will rally hard. While the $15 you're paying now is all-time premium, if the option goes in the money, they'll start to move dollar for dollar for every move that the company makes going forward. And getting dollar for dollar moves on a $15 option contract is far more powerful for your portfolio than getting a dollar for dollar move on a $120 stock. So if we have the 270 calls and shares go to 300, simple math tells us that we now have $30 per contract of the option being in the money. And that's on top of any time premium that's still left. So there's a potential to more than double your money on a trade like this, even if the stock just goes up another 50%. And timing doesn't have to be perfect either, since we're giving ourselves plenty of time for this trade to play out. Generally, however, whatever's out of favor with the market now will come back into favor within a few months. And when you have a subsector like the pot market that's going to be in and out of the news all the time, buying a call option on the biggest name in the sector during a down day, like Monday's 15% decline for shares, looks like an attractive speculation. And remember, while I'm using Tilray shares and options here as a specific example, anytime a company or sector is on the move and just had a big dive, it's attractive for a rebound options play, like making a long call options trade like the one I outlined here. So there's just one last thing: when to sell. And that's a tough one. If you get a good rally going on a company and the call options are surging like crazy, it's tempting to hold on to the trade, even if it ends up diving again, and you end up losing all of the profits that you made on paper. So, as a general rule, I would suggest selling half your position once it doubles, assuming you traded at least 2 options contracts. But I'm also not adverse to closing out if the gains are lower, around 50% or so. After all, when you're buying a call option that relies on a heavy bounce, it may not move to the point where it comes in the money from its out of the money status, where the share price is at least as high as the strike price on the option. Now, there's nothing wrong with racking up 50% gains time and again, however. And if you follow a rule to only sell part of your holdings, you can let the rest of the trade ride even higher. So if it gets there, great, but you've also gotten your money back. So there you have it. One safe way to use options to play news-driven companies like the current market obsession with the marijuana space. Stay safe out there in this challenging market. But if you're interested in a smart speculation in the pot stocks, consider a call option on Tilray, ticker TLRY. That'll wrap things up for this week. Thanks for joining us at Trading Tips. I'm Andrew Packer, wishing you good trading and good financial health.